All right, guys, how's everyone doing? This is Paul Singh, the market speculator with bullsonwallstreet.com. Today, we're going to talk about 5 ugly stocks to watch. Normally, we're going for the best stocks in the market, momentum stocks that have been running, and we've got a lot of those right now. But a couple of issues in the market right now. Number one, it's earnings season. So some of these we can't trade because earnings are coming up and we don't want to hold through earnings because essentially that's gambling when you do that. And number two, some of these guys are really extended and they're tough entries right now. So we're going to build a list of other types of stocks that we can trade, and we're going with the ugly stocks. Now, normally you don't want to be trading these, but sometimes these things can really pop and give you some big gains when they've been beaten down and then get some good news coming in. A few things we watch for. We watch for a pattern shift, and we start to watch for indications of money flow. Is there money coming in, even though price action might not be showing that yet? So let's hit those stocks. Number one is Fitbit. We can see here, going back to late 2015, it's been in a steady downtrend. At one point up here around 35.40, and now we're at 5 very quickly. Essentially gap down. We get a consolidation, another gap down, consolidation, another gap down, consolidation, and we have this ugly volume pattern. Now, more recently, there's been a little bit of a shift that's not quite that noticeable. But if you're on top of it, you'll see that we have had some spikes in volume. Not just one spike, but 1, 2, 3 little spikes here, and price action corresponded with those spikes. We got a gap up. It did pull back, but we got another push here and another push here, and we're back up over the 50-day moving average. So maybe this thing is bottoming, or if not bottoming, maybe we can get a bounce here from 550 to 720, maybe even up here and fill this gap up here, which to 11, which would be a huge move. And even if this stock is not going to come back to where it was before, just retracing to 11 is not that difficult when this stock has been up around 50. So there's the potential for that here. A couple of ways to play this. One, you could just take a shot right here and say to yourself, you know what? I'm going to play this till 8. I got 3 points in here, and I only need to risk about 50 cents to do that, putting your stop here, and you've got 6 to 1. And we're going for usually 2 to 1, 3 to 1, 4 to 1. And to get a 6 to 1 here is fantastic. And it's a low price stock. And I know a lot of you guys like to play the low price stuff. So there's potential here. And if it does spike, the other thing is there is some short interest, so we could get a short squeeze as well. So keep Fitbit on the radar, either just taking a shot here or wait for some positive price action. Maybe this thing gets up above 590 and then you get in. So that's Fitbit. The second one we're looking at is Coolio. You can see here TWLO, pretty ugly here. It's an IPO, had a huge IPO run up to 70, and then just basically after the IPO lockup, it's run down to 23. Looks like it may have bottomed out here on this last gap down, and now is showing some strength. Now, a couple of ways to play this one here. If it were to bounce, there's a lot of room here to move, and it doesn't have to get back up to 70. Entering here at 30, let's say we play it to this area gap here around 50, not even 50, let's say 45. You've got 15 points here, and really all you need to risk is maybe 2 points. You keep a 2-point stop, let it try to test this 200, some back and forth here. We're risking $2 to potentially make $10, $15. So again, we're looking at 5 to 1, 6 to 1, 7 to 1 on these. So there's a lot of potential with these, and you only have to risk a little bit. It's already gapped down, pulled into the gap range. Maybe it fills this gap. You could take the shot here. You could wait for it to fill this gap. When it fills this gap, that's when it could really run. So that's the way I'll probably play it. If it can get above 34, I'm in. So I'm going to wait till 34 and then see if I can ride it out to 45. That would be a 10-point win if that happened, and I'd only need to risk about a couple of points here to do that. So that's Twilio. Let's go to Crocs. Another ugly pattern here. You can see here at one time, if we go to the 5-year, this was a really strong momentum stock all the way up around 75 here. You know, it's been a lot of years since it did that, but if we look at it more recently, it has been in this trend here from 12 all the way down to 5. But look what's happened. Initially, we had money flow here, money flow here. Now we got that big spike in here, and it's floated up, clearing the 200 and the 50, and the 50 is crossing the 200. That's a positive sign that, you know, the 50 is in an uptrend here, and at some point, if this continues, the 200 is going to start to run up as well, which signal potential momentum. Now we have a gap here that needs to fill around 11. So let's say we enter somewhere in here. At the high point would be 8, or down here around 770, somewhere in there. Let's say we enter at 8. We've got 3 points potentially in here. And if I entered at 8, I'd probably only use a 50-cent stop. So again, you know, 3-point win, 50-cent stop, that's 6 to 1. So again, we're getting these 5 and 6 to 1s, really fantastic reward to risk ratios where we can win. You know, if we took all 5 of these, and even if 1 or 2 hit, we're going to end up making money. Or let's say 2 of them hit out of the 5, we end up making a lot of money here. So another high risk, low risk, high reward play here. Finally, we've got X here. Steel has been on a tear since 2016, but when it pulls back hard, and it's had an ugly pullback here after running from 2016 to 2017, and we traded this quite a bit, made some good money on the way up, but from a run of about 6 all the way to 40, it has now pulled back on a 50% retrace down to about 20 here. And these crazy momentum stocks can do that. They can retrace 50% and then make another fantastic move, and that's what we're looking for here. So commodities have been hit a little bit because the reason they had gone up, even prior to the election, they were going up. But then once Trump was elected, there was his plan for infrastructure, which has been on hold now. And the fact that it's been on hold caused a lot of these commodities to pull back. But they are coming back now. You can see with X, what we're looking for here is for it to pull into the gap. I just recently traded, and it was one of our nice wins in the last couple of months here, going from this range down in here all the way to the top of the range. Now we're going to play it for a break into this 24-25 area. If it does that, we've got the gap fill at 30. Then maybe it hits highs at 40, but right now we'll keep it more near term to this 31 range. So let's say we enter here at 24.50. We enter here at 24.50. We're going to place probably a point stop. Yet we're going for a 6 to 7 point win. And common theme here on these ugly stocks, we want really good reward to risk ratios. And again, we're getting 6 or 7 to 1 on the reward to risk here. So really good reward compared to a really minimal risk here. And then finally, Snap. This is the ugliest of the bunch. And unlike the other 4 I showed you, this one is showing no signals yet of improving. The other 4, we already have signals in terms of price action and money flow to get us really interested in these stocks. Snap, we have none of that yet. We're going to wait for it, but I want it on my radar because a lot of times these high interest, where you got a lot of eyeballs watching these IPOs that get crushed, and you can see here, it made an IPO high of 29 all the way down to 14. At some point, even if it never recovers, and maybe it does someday and becomes a momentum stock like Facebook and Amazon and those guys, but for now, eventually it should give us a nice bounce. Like right down here, it bounced from 17 to 21. That was 4 points on a $17 stock, really good. At some point, we're going to get another bounce, and I'm going to wait for that signal. So we can play a very quick bounce type play, and you'll need to see a strong reversal candle for that. And then we'll watch to see if that bounce continues and do we get money flow coming in. And if that happens, that's when it'll become a 6 to 7 to 1 reward to risk. And we're going to watch for that. No signals yet. out of the 5 ugly stocks, this is the ugliest because it hasn't given us a signal yet, but we do want to be watching it. But be patient, only trade on the good signals. So that's the 5 ugly stocks I'm watching right now. The rest of the focus list is all based on strong stocks, big tech, and some other areas that have been really strong, like solars and a few other areas. So keep an eye on these. Look for the signals. Don't hesitate when you get the signals. We'll keep track of them. And I'll see you guys next week with the next weekly swing. And don't forget, there's the trade report that you can join, and also a ton of free blog posts. bullsonwallstreet.com.